The old saying says that history repeats itself. If we follow this phrase, then the sad reality is that America won't stay a superpower forever, and neither will the dollar be the world's currency. However, while this seems scary, it may actually be an excellent opportunity to get rich. And in this video, we'll share the 2 assets that Jim Rogers is investing in to get rich so you can too. For those of you that don't know, Jim Rogers has a net worth of $300 million, and he is an American investor and financial commentator who currently works out of Singapore. He was the co-founder of both the Soros Fund and the Quantum Fund, and is expected by the name. He became popular due to the famous investor George Soros. There's a lot of history when it comes to understanding the importance of the 2 assets that Rogers sees as the go-tos when investing in this economically unstable time. To really get a good look at what to expect, we actually need to take a look at Britain over 100 years ago. During this time, Britain was the most powerful nation in the world, with seemingly no one able to top them. However, within a matter of 50 years, they became totally bankrupt and lost their position as a world superpower. So how can such a massive empire dwindle to bankruptcy in such a short time? To find out, we need to look at the context. Firstly, it's important to note that no country usually stays as a superpower for longer than 200 years according to history. With that in mind, during the 19th century, and over the course of 90 years, the GDP almost quadrupled per person, which is absolutely mind-boggling. However, growing the economy at such a speed has its obvious downsides. For one, it puts a nation in massive debt, and secondly, it makes inflation rise very quickly, and often to the point that it can't be reversed. For some of you, this may strike a familiar chord as it's drawing a very close parallel to our current times. America has been rapidly printing money, and it's now the country with the largest debt ever recorded in history. For a point of reference, America owes the world $14 trillion more than the world owes it, according to the Bureau of Economic Analysis. If we dive further into the symptoms of a collapse, then we can take a more detailed look at the economy. Firstly, inflation is at a major high, and even with the consecutive and aggressive interest rate hikes, inflation doesn't seem to be going down a whole lot. On top of that, the S&P 500 index is down 17%, and the Nasdaq is down 30%. According to Jim Rogers, it's no surprise as the general economy has been in a massive bubble where things are becoming more and more expensive. In fact, this concern has been sprouting a common thought that tying one currency to a country is not the best route to take. The European Union is trying to learn from its mistakes by desiring to make parallel currencies within the euro so that the effects of inflation can be mitigated. Despite this, it can still cause problems. But there is one group of assets that is foolproof against inflation and what it does to a country. Can you guess what that is? Let us know in the comments below. However, before we can dig into these extremely useful assets, there's more history to uncover. When it comes to America more recently, specifically the 2008 crash, we can find out some more interesting information. The head of the Federal Reserve of America, or the Fed for short, was someone named Janet Yellen. Some of the older folks watching this will probably remember that she was the one in charge of selling treasury bonds and securities to boost the economy. This worked quite well as she managed to increase wages, employment, and the economy overall. Unfortunately, while everything skyrocketed, something horrible was right around the corner. Yellen managed to create a massive bubble with her choices, and it's having major impacts even now. And it will continue to have impacts into the future, according to Rogers. Essentially, since mortgage rates were so low during this time, banks gave out a ton of loans. The big problem with this is that there was no foresight because a good thing like low interest rates can't last forever. So, as expected, the bubble burst when interest rates shot up to stop inflating, and tons of families had to default simply because they couldn't afford the home they were staying in anymore. Obviously, the banks were hit super hard because of this. To take it one step further, Jim was pretty clear in saying that the next time a problem comes up, It will be much worse than it was in 2008, and he even went as far to say that it'll be the biggest problem in his lifetime. One of these issues is hyperinflation, which is when the dollar will become extremely weak and does not have a lot of purchasing power. But that's usually at the end of a superpower cycle. This, according to Jim, won't happen for a very long time. But aside from all this bad news, there have been people who profited big time through these economic downturns, many of which weren't rich or experienced investors. If we look at the crashes that happened in 1929, 1930, and 1931, there was one specific asset that actually benefited due to its reliability and stability. It was commodities, but more specifically, gold and silver. Commodities are known to have a positive correlation with inflation, meaning the higher inflation is, the higher commodities will be too. So, in a time where inflation is seemingly only going up, having a basket of commodities, according to Jim, is your best bet to be safe. Funny enough, this is a very old wisdom that some of the oldest investors will tell you about. They'll always say, have some physical gold and silver because it will protect you when currencies fail. Funnily enough, both Yellen and Powell, the two most recent heads of the Fed, say not to bother with investing in gold and silver because they're outdated and not necessary. However, the proof is in the pudding. Gold and silver aren't ever affected by bubbles, but are directly affected by the movement of inflation and the economy. If we look at stocks, there's a negative correlation when it comes to inflation, meaning when inflation goes up, stocks go down. This is pretty clear for anyone who pays attention to the market, as the prices of most indexes are pummeling downwards at a very quick rate. In fact, we've been in a bear market since 2022, which is when the index drops over 10% from its all-time high. Fortunately, there is one more asset that has a positive correlation with inflation and can help assist you when times are rough. But before I share it with you, make sure to leave a like on the video and subscribe to this channel for more content about personal finances. The other asset that Jim Rogers says he'll be thinking about is real estate. This asset moves positively with inflation. When inflation goes up, the price of rent also goes up, meaning real estate owners make more money. Another great investment practice, although a much riskier one, is to get a property for real estate during a difficult financial time, similar to now, with lower home prices. During this time, no one wants to buy. But if there's an expectation of house prices going up very soon, then holding on to an asset before buyers come in can really rack in a lot of money. One of the most famous investors to do so is a man named Carl Icahn. He uses a similar investment practice as the famous Warren Buffett called value investing. An amazing investment choice he made was buying a bankrupt building shortly after the market crash of 2008 for around $150 million. Over the next few years, until 2017 to be precise, he managed to sell the building he was holding on to for $600 million between two buyers. To show how amazing this investment was for him, let's look at his return on investment. His ROI was a grand total of 75% return, which is huge. While this may seem like a gamble, the truth is that the economy cycles. There are good times for assets and bad times, but generally making sure you are well balanced is key. As Jim Rogers has clearly shown, having commodities and real estate in your nest will surely save you some major headaches and stress down the line. But what do you think? Do you see the economy crashing anytime soon? Or do you expect the American dollar to hold out strong for longer?